Hello, fellow traders. 'Tis I, the Rumpled One. It is Wednesday, March the 28th, the year 2018. Let's talk trading. Repeat. That's what good trading is. You repeat something over and over and over again. You repeat what's profitable. Hopefully, you don't repeat what isn't profitable, though some people do. But one of the reasons I chose the topic of repeat was I had some questions. Tom S. How do you know where to take profit and which trades to let run or go? That's a question I've received many times. And the answer is I don't really know, number one. So that's why I created the exit playbook videos. So if you come here to my channel and you can look up exit, I think you just have to do exit play. And there's a picture of me standing in front of the board. Me talking about the same chart for exit. Do you use the same chart for exit as you do for entry? And I think that is it. So that's one of the questions I receive a lot of the time. But let's see, I think there was some other questions. Let's see, thanks so much. Okay. Wants to see more videos. Okay, I guess that was the main question for the day. So the thing is, I don't know. That's why I created that exit playbook. Basically, yeah, I watch football sometimes. And you see the guys on the sidelines and they got that big laminated sheet and it's got all their plays and all the ideas. And so I decided I wanted to create one for trading. Yeah, you can have an entry playbook too. You know, one side you have entry, one side you have exit, but exit's usually the big one. When do you know when to exit? Well, when something meets the criteria of your exit playbook. One of the criteria might be it hits your stop loss, okay? That might be one of the times you exit when your money and risk management tell you to. But usually they want to know, when do you take profit? I mean, look at this weekly EJ. Let's get back to dollar Canadian because that's what we're talking about this week. And as you can see here, if I remember correctly yesterday, the dollar Canadian was right around the weekly open. I think it was within 3 or 5 pips. But now you can see it's 30 pips above. And once again, the gap filled, and we've got 1, 2, 3, 4 that haven't. I think we had 5 yesterday, so it looks like another one filled the gap on the weekly gap. But when to take profit here? When would you take profit? I mean, if you got in and you were with, say, on the buy zone, we could probably move over here. So let's say you got in here at the open. You took the buy zone, you went long, and price is doing its thing. We can see the buy zone a little bit later here. Actually, let's just move on over. Here we go, one more chart. So let's say you got in here, right here, and it didn't go below the open. So right here you got in. When do you take profit? Well, depends on how price is moving. And I guess maybe we can even go down to the 1 minute chart and really see how is price moving at that time. Okay, so you see here, if you got in, say you got in right there. Now price is just kind of wiggling around, right? And then it goes up. And let's see, right from here. Wrong button on the, okay, from here. to here, you had about, 2.6 pips? Not much. So maybe you go, okay, what I'm going to do is, maybe my exit playbook, you might say, what I'll do is, once it gets to 5 pips above, I'll move my break even to break even plus 1. Okay, and let's see. And then you want to see what happens. And right there, it didn't take it. But if you never moved, you would see here. So you can see price put in a high right there. Then it went above it. And then when it came back below it, maybe that's where you put your exit. So in your exit playbook, it says, if it makes a high and pulls back, doesn't take me out and goes on to create a new high, somewhere between that previous high and that new high, maybe I'll move my stop up to 1 pip below that new high. So if you did that, let's see, you would have banked about 10 pips. Not bad. And so if you would have banked 10 pips off of this trade here, I think you should be pretty happy, because then it came back in and you had a chance here. And so how far was that? Oh, that only moved 4 pips. Let's see, can I widen that chart a bit? Yeah. So it only moved about 4 pips there. And then maybe you got taken out. Or maybe it moved 4 pips and came back down. You can say, wait a minute, right here, it did make a higher high. You got an inside bar. It broke through that inside bar, and it came down here. So maybe you just scratched the trade at +1 or 0. Say, wait for another day. Then it came down here. You know what? I can't see something. I hate this Windows 10. I swear I hate this Windows 10. This stupid search box. Couldn't see how much time I have left in the video to record. Anyway, where was I? You came down here. Let's see, right here. You got in. And once again, it made a new low. See, there was the low, made a new low. Came back through that low right there. So maybe you had it 1 pip out. Once again, that would have been a nice trade. You can see here, made a higher high, came back down through that previous high, and once again, you would have had a nice trade, all off the buy zone. So, I mean, what you have to do is you plan these ahead. You give yourself rules that tell you when to exit. You can either do, if I'm up 5 pips and then it goes back to +1, I'm out. If it's up 10 pips, it goes back to +5, I'm out. If I'm up 15 pips, maybe I take half off and then I let the rest ride, move the break even to break even +1, and see what I can get. If it gets to 100 pips, break even plus 100 pips, then maybe I will just take my 100 pips and be happy and not be greedy. You decide how you want to exit. That's what you have to do. You have to make that decision. But write it down ahead of time, and then you can just follow it. In fact, if you use my my notes indicator right here, you can put it on the chart. You don't have to use big size font like what I do on this one, but you can put it right on the chart. In fact, I know there's some traders that do. Here we got the training wheels on the rat. Okay, we got rat zone trading wheels on, and you can see here it's putting in a high. Really only 52 pips of range. So maybe you might trade the rat zone, maybe you might not. But see, once again, here you go. You've got it making a new high, comes back down here. So if it gets below this point and you were long, see right there, maybe 1 pip below that, you take the money off the table. Okay, here we go. Open the pivot. That's right there. It hit the pivot. and you're out. That's the whole idea, is that you want to just get the range between here and here. Now, some people might trade it longer. I like to take that as a no-brainer trade, meaning I'll put the trade on. I might not even put a stop on, but I will definitely put a take profit right there, because I know based on statistics, it'll run it. Now, does it do it every day? Of course not. But that's a trade I like to do. But, boys and girls, don't try that at home, So remember, this video is educational purposes only, and all that other CFTC or TCFC stuff, disclaimer. Just don't do it. How about that? That should comply. Just, I do it, you don't do it. Anyway, tongue in cheek, right? Price action. Once again, you can, this is something I'm repeating myself, but that's the whole idea. Okay, you're making a new high here. You see green at the line. You went long, and you're up about 5 pips already. Okay, this is really some simple stuff here. Once again, green candles at the line, you go long. Red candles at yesterday's 5 lines, you go short. Once again, pretty simple stuff. I mean, right there, that's pretty much the open. The close and open are usually about the same, except to the Friday, Sunday, or Friday, Monday candles. That's when you get the gap. And we're looking at a wick zone. Price goes in, price comes out, price goes in, price comes out, price goes in, price goes out. Repeat. And you see here, sometimes you get a little, sometimes you get a lot. So exit, it's just like, hey, if it's coming back down, if it gets within, you're up a few pips, and then you just put your stop there. Okay, you didn't make much. It did it again. So this time you say, wait, it didn't break the high. Say, okay, it break the high, came back. Oh, now it's coming back. Not much of a wick zone, but it's coming back below this high. Okay, I'm out. Look, you got a bear candle. You got these 2 bulls right here. You got a bear. You're out. Done. Take the money off the table. Be happy. What happens here? Comes way down here. Well, look at this. You see that? What does that tell you? It tells you you should be taking profit right about there. Okay, that's one way to take profit. Okay, we've got a holo setting up. We just started this hour. So next hour, we should probably have a nice holo short on the horizon, right? You see here, had that lowest open, came down, put in a new low, boom. Oh, I did a John Madden again. Can't help it. Oh, so we're looking at price action. You can see here, right here, there's your price action. You can see right there. Now it just told you to start. It's selling. Sellers are coming in. Look what happened. You see that? And you see here, that was the lowest ask value. You see how price came right there and then reversed off of it? So that means we're still selling. So in order for the buyers to come in, they have to move that up, okay? And so you see this got right close to there. So right now we're really deciding which way price is going to go here. Okay. Okay, did you see that? You see how price went across the line? The buyers are coming back in. So if you know how to read level 2, this is just another way. But traders, no matter what, it's not what you trade, it's how you trade it. TheRumpledOne signing off to drain the banks.